This is our Forex blog for September 26, 2012, and I would like to go over the first step of our three-step easy Forex trading system, which is using our currency meter. You want to find the currencies that are most strong to buy against the currencies that are most weak, and you want to focus on the currencies that are weakest to sell against the strongest ones. The easiest way to use the currency meter is use our sortable one, which I like to sort the trends by which ones are going up or down the most versus other pairs over the last hour. And you can see the New Zealand, yen, and dollar are the strongest. CAD, euro, and pound are the weakest. And so, as you can see today, on most time frames, the New Zealand was strong, and especially here at 8 o'clock, the CAD was weak in the real-time trend, 15-minute trend, hourly trend. Daily trend was up. It shifted down at 8. The weekly trend also shifted down a little bit before 8, and the monthly trend is very strongly down. So when all the time frames are down, it's, and you have another currency, let's say like the dollar, that's very strong at this point. Now, unfortunately, the dollar got strong at 7, and you can see a little bit of weakness coming in here. Most of the trends are down at 7. It had a 3-hour move up, and that's one way I look at this. What's the most time frame trends? Obviously, some days are really easy when every single time frame trend is one direction, and other days are a little bit harder to read when multiple time frame trends are going in different directions. So I might just create a new version of our currency meter that just shows one indicator, and it will sum up the real-time trend strength with maybe 60 to 70% of the weight, and then influence some of the longer time frame trends. 15-minute, hourly, daily, weekly, monthly will make up the remaining 30 to 40% of the weight, and then you just have to look at one indicator. It might make it easier for some traders. You can see here at 11, all the time frames are down with the CAD, and the New Zealand's one of the strongest. So let's look at it after 11, and this is the easiest way of trading when all the time frame trends line up. So the New Zealand is strong, the CAD is the weakest. And put this on layer 7 so it doesn't disappear. And remember, this is 11 o'clock. It was strong even before that. This one got super weak here at 11. All the time frames are down and they're dark red, which means they're extremely weak. So here's 11 o'clock right here. Price continued up another 25 pips. So, this is a 5-minute chart, but most of us use range charts, like at 5 pips per bar. It lets you find patterns like, 2 to 5 bar pullbacks that you can't always see on time-based charts. So, I would prefer, after you have a strong trend like this, for at least 2 bars down, preferably 3 or 4. But this was basically going sideways, broke out. This is your first move down. And one thing that you can do if you don't get a decent sized pullback, add our intraday value areas, 60-minute or 30-minute, and buy a breakout of from below to above the value area of the previous period. So this is going to download a ton of tick data, and you can see during this hour right here, price is way above the previous hour's point of control. This is where most traders had position. So as long as you're above the point of control, you tend to have nice strong trends. In fact, you would have stayed in this because it never was really even able to close underneath the point of control, and it still hasn't. So this can be used to keep you in there. Hourly is too slow to find an entry if you missed it earlier. So let's take it down to the next level smaller, maybe a 30-minute. So here this one exploded up. During the next half-hour period here, it came down and found support there. That adds to the probability of this continuing up. And for the trader I talked to on chat today, Fibonacci's are critical for letting you know when to get out and also for when to get in. You draw your fibs from this first swing, and it gives you your Fibonacci profit target level. Anytime it goes to the first fib target and goes sideways, I tend to exit half, and then I will move my stop up. Whether you're using a trailing stop, or if every time it goes sideways you yank your stop up underneath the sideways action, I probably would have got stopped out finally here at 81.10. So that's one example of how to use the currency meter. Another way of using it is to look at the momentum. The real-time tool shows mostly intensity of moves. Anytime, let's try to find a perfect pattern on here, which I consider perfect. Extreme weakness like this in the euro, followed by very little amounts of strength. Usually that previous momentum will continue. And so you don't wait for the bar to go red and close before you get into the trade. When you see a lot of weakness like this coming up to 7, and I prefer 30 minutes to hour pullbacks. This one was only 15 minutes. There's 3 bars. Each of these bars is 5 minutes. But if you look at the 15-minute trend, let's scroll all these back so we can see what they all look like right at that time. A lot of weakness as you're going forward. There's not a whole lot of strength. And notice the strength falls off here in the euro. Which one is very strong? Well, the New Zealand is very strong, and it has very little amount of weakness right now. I prefer 2 or 3 bars of weakness coming in here. The Australian is also strong real time, but the longer time frame trend is down. So I would much prefer to trade the euro against the New Zealand here. So let's take a look at that exact time frame for a short. The euro is weak, the New Zealand's strong. We're looking, let's click on the chart here to see exactly what time. It's 7:25. We're anticipating a sell. And I'm going to scroll back on this, 7:25. And this goes back so many bars. Let me take that intraday range thing off there. I might need to put an option for you to put in more bars back. We don't need this for this illustrative purpose. Okay, so at that particular time, we're looking for sells. Let's say you got short right here. Well, if you put your stop right above the high, guess what? You got stopped out. And a lot of times when you get stopped out, it goes up a little bit higher than the trend continues. So I would go short again right here, put my stop above the high here, and it goes down, up, down, up. At that point, I'm moving my stop near break even. I'll get out of this trade at break even. And then it goes up a little bit more, coming up to 8. As we scroll forward into this, notice that the New Zealand, if you're watching, if you got into a trade like that, guess what? It's got some weakness. The euro has a little bit of weakness too. However, the New Zealand is weaker than the weak euro. However, most of the other time frame trends are up in the New Zealand. So typically, it's just a matter of time before the market reverses. You can draw your fibs on here to get an idea of where the next area to sell is from this first swing. All right. So let's say you took a trade. You might have lost 6-7 pips in the first one, break even on the second one. You short this third one right here. You lose 10 pips. You're down 15 pips total. You want to redraw the fibs off the last wave. And you can see a lot of times after the market makes a 2 or 3 wave move up, I'll get into a trade and I'll scale in. My entry might be here at 0.2. Comes down, it's kind of going sideways. I'm going to put my stop right here. I would have maybe made 15 pips on that one. Came back up again, was not able to even go to the high here. Shorted again right here. Again, once you get into a trade, it goes your way, then comes against you. I tend to move my stop to break even pretty quick. It didn't break these lows. I'm going to usually exit half my trade there and maybe the other half here. So I would have a small profit. If I shorted again here, I'd have a small loss. Shorted again here when it failed to break out and stay above the highs. And once it breaks this low here, I'm anticipating at least a 2-wave move down. So here's the first wave down. Once you have confirmation that the trade's going your way, these make excellent profit targets down here. If you short somewhere around 56.90, you have 56.55, 45 pip potential profit. Now, if it breaks through the first one, I typically exit all my trade. The second one, if it stalls at this one, I'll exit half, put my stop above the high. Now, if it goes through the second one, I will watch it like a hawk. All right, so I'm out of the whole trade right here. And you can see you're short at 56.88, out around 50. You made 38 pips on that one. So, if we were down 15 pips, lost 10, maybe made 10 on this one, made 8 on this one, you're pretty much break even, and then you're left with 38 pips profit. by trading with a currency meter. It always baffles me. A lot of people say, well, I look at your currency meter and I take a trade and I have losses. Well, you're going to have losses because very rarely, one day out of 5, one day out of 10, does the market go one direction. It just keeps going and going and going. The rest of the time, the market goes down, shoots up, a lot of times continues its trend down, but it might go down only 5 or 10 or 15 pips, and then it shoots up. The next wave up, it runs into major selling because the longer time frame trends down, and then that next trade, the one that you might not have even taken, goes 30 or 40 pips. So, if you're going to be fair about any system, you have to evaluate it based on taking every trade. You can't just say, well, I lost 2 trades and I quit trading. Well, what happened the rest of the day? Did it move? Did it have many different 20 pip, 30 pip, and 40 pip moves? Well, if so, evaluate that. Like, for instance, the yen here, very strong for many hours. After 5, 6, 7 hours, I'm anticipating and hoping for 1 to 2 or 3 hour pullback. So at this point, this is about an hour and a half here. I would start maybe at 6:30 looking and anticipating for the previous yen's trend to go back up. Now, obviously, there's a failure here, but then later on, the trend does come back. So let's find, at this point right here, we're anticipating the trend coming back, 620. Which one's strong? Which one's showing weakness? Well, the Swiss and the Euro at 6 o'clock are both already weak. So if some strength comes back in the yen, these are already weak, and they just, kind of went weak for 30 minutes. They weren't weak for 4 hours. If they were weak for 4 hours, I would, not want to take it because it's already gone down too far. It's more likely to pull back. So let's take a look at the Euro yen coming up to 620. I'm just bringing it up on this existing chart here. So here's 6 o'clock, and you can see, it's kind of going sideways here. Obviously, this was already in a downtrend. A much better trade would have been, kind of to draw your trend line underneath the bar's lows and wait for it to get broken. That makes an excellent trade. You can use our moving average using the digital signal processing. 5 bar, 2 period, shifted 2 to the right. And wait for a decent sized pullback. You can see in this case it pretty much it was very similar to the trend line. So once the trend was down, wait for at least 8 to 10 bars above the moving average. So you got 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13. At that point, it breaks down, and you might get short and get out of half your trade here and get out of the second half here. Wait for a decent pullback. You can see 1, 2, 3, 4, 5. That doesn't count. 6, 7, 8, 9, 10. This one's a little bit higher probability. If you, wait for at least 15 to 25 pips off the lows, you're going to have a lot better, higher probability. Also, if you use the Fibonacci and sell the 38 to 50% retracement, you're going to have a lot more success. Notice this went right to the 50%, which is my favorite area to sell. I don't like to get short up to 38%, and I rarely will sell underneath the 38%. So the Fibonacci's have always been a part of our system for 8 years. Well, I've used them since '99 for stocks and futures, and they pretty much work on every market. And my favorite fib pullback is the 50% level. So, if you get short right here and you have a losing trade because, this one's already gone down too much. Now, notice also on that previous wave down, where did the market stop at? Well, it went right to the 1.382. It wasn't weak enough to go through this and go to the 1.618 fib target. So that means it's more likely to pull up to the 50 or 62% retracement, then find support to 38%. When markets are super weak and go to the second or third fib target instead of the first one, they typically don't move up that much. So you can use that to eliminate some of the unnecessary losses. So as you go through this today, watch, going later on in the day, this 50% fib level held here. You might have shorted it. And typically the third time it gets hit, it's going to break through it. The fact that it didn't here means it's likely to go down. It's likely to go down at least 2 waves. So if I sold that third one right there, I would draw my fibs off of this little mini wave right here and kind of hold and wait for this fib target down here. So if I was short at 101.05, I would get out somewhere around 80. Came within 2 pips of it, I'd be out right there. And so and also use trend lines to determine what the trend is. This one was in the trend line down, and it broke out right here. It's safe to assume that we might break out to the upside. Try to get as many areas on the trend lines as possible. And so once it broke this trend line here, it's safe to assume the trend's down again. But it may not go down to a lower low, and if it does, it's probably going to run out of steam somewhere at the next fib target off this next wave. So it's just kind of chopping around in there once those trend lines got broken. And also later in the U.S. session, it becomes harder to trade most of the time. So let's take a look at the Swiss. It's weak across the board too. The yen's strong, especially earlier in the day. Some Swiss yen trades, and we'll go back to a 5-minute chart since it loads faster. Swiss yen. Once the market goes down, wait for a decent sized pullback. Again, 15 to 25 pips. This is 70, so that would mean pretty much 85 to 90. And it really never really pulled back that. This one may not move that much. You can also use our range projection tools. There's so many ways to use. Don't just expect everything handed to you on a silver platter. All the information, all the tools are out there. You got to learn how to use them and see what works best for you. This shows you how far it moves every hour, and if you get short in a downtrend near the upper quadrant of near the statistical high, it's a much safer trade. Notice this one here touched it to the pip. If you get short in the middle of the range, it's usually a little bit lower odds trade. It's also riskier. The market could go a few pips this way and explode up and hit the upper band. Let's bring the Euro Yen back on just to show you the hourly statistics. You can use hourly, 4 hours, daily, any time frame you want. And obviously, if you get short near the upper range bar, the statistical hourly high, notice how well it worked. There's so many good trades today. And this gives you a very high probability place to sell. Also, in making good progress is our range, the new tools I'm working on that will show you. And this works on range charts. I'll put a 5 pips per bar back on here, so you can see most of the trades here found at least break-even trades. This one here would have been a loss. This one here found 15, 20 pips. This one here found 10 pips. This one here, once the market starts going your way, you should move your stop to break even. Worst case scenario, now was a break even. This one found 10 pips. This one, pretty much broke even. One last thing I like to do in finishing today's blog video is to let you know what I've kind of discovered. There's no substitute for human professional traders' judgment on the market. And so one of the things I'm going to be doing to improve the accuracy of our systems, and I'm just starting to put that in there right now, is to look at the charts each night and decide whether the system should be buying, selling, buying and selling, doing nothing, or waiting for a breakout up, down, and at what levels it makes sense to do counter trend buys and sells. So you can see this was saved last night, 9:25 at 10:33 p.m. Once you save a file on the server, it basically puts that date and time there. So I'll make a quick modification of it right now so you can see. Save. By doing that, you can see it now has today's time, 3:49 in the afternoon. So the reason I show that is, so you can see what I had thought was going to happen today as of 10:33 last night. And this is kind of what I'm going to be doing on the major pairs. At first, I'm going to start on the euro dollar, euro yen, pound dollar, pound yen, maybe dollar Swiss some days. If the Australian and New Zealand pairs are ripping, I might do those. But I'm not going to do every pair because it takes a lot of time, and I want to make sure I do it right for the pairs that I have it for. But basically, the system will look at it and see whether it should take all trades, none, buy and sell, or buy above a certain level, sell below. It should be sell minus here. These are going to be the main codes I put into the trading plan. But you can see last night that the euro dollar, I really only wanted to buy above 1.2910. I only wanted to sell below 1.2950, and I just added this one here to resave it. And you can see with the euro dollar, basically buy above 29.10. Price never got above 29.10, so we would not be looking for buys today. And I also put on there resistance, minor and major resistance at 3,000, 30, 30, and I thought there would be some buying at minor support 28.36, and significantly, probably the lowest low of the day, 27.78 is what I was estimating. And these are based on fibs mostly, and other support resistance. But 28.36 was an area of support, and this is an area that pretty much we'd be, if it was below 29.50. I'm sorry, if it's below 29.50, which clearly it was below 29.50 all day. We're mainly looking for sells down to 28.36, and if it's extremely weak, using our real-time momentum tools, we'll sell it down to 27.78. But 28.36, notice the low of the day, 28.34. I was within 2 pips of, it went basically 2 pips underneath an area that I thought would be support. So, once I put that code in there, if it wasn't that weak at this time, it would have actually done a counter trend buy trade right here and caught 25 pips on the way up. But this is what I'm planning on putting in there. Let's just take a look at one more. We'll put the euro yen on here. This one I also thought had more likelihood of going down. Sell below 173, buy above 143. So 143 pretty much never got above there, and obviously it was below my sell level. Let's see if my support area was right. Minor support 99.51, and I thought the maximum low would be 98.76 if it broke that. So 99.51 is where I thought the low would be, and it didn't quite. It wasn't weak enough to get down to that 99.51. So basically we would have been continuing to sell this down to that level. So that's one thing I'm planning on putting into the software, and I've also put in our real-time momentum tools, which I've never used. These signals are based just purely on chart patterns, and believe it or not, do not even use one of our best tools, which is the real-time momentum tools. If you have a market that is going up without much strength, and the previous trends in the past were extremely weak on the way down, we definitely want to sell it after a decent-sized pullback. And again, these are based on chart patterns. Another way of improving your odds is to simply put on the digital signal processing based moving average 5-period, shifted 2 bars to the right, click DSP for digital signal processing, and typically after a 8 to 10 bar pullback above the moving average, if the trend's down, you can sell it. So you can see 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12. Short here, it goes down. 1, 2, 3, 4, only 4 bars up. Guess what? That trend doesn't continue. 5, 6, 7, 8, 9, 10. You can start counting again once it continues up. At this point, it's extended. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. This thing is extended. Guess what? It goes down. And that's just kind of a rule of thumb that I've always traded with. It's very hard to teach a computer to count properly the decent-sized pullback, but a human should have no problem. So therefore, when you get these sell signals, wait for it to break the trend line, preferably after having been at least 10 bars above it, and you'll dramatically improve your odds.